if I was a first-time home buyer, here's one thing that I would not do is disqualify myself. I don't make enough income. Don't do that, okay? But if you're going to do that, here is a quick tip that lenders, how we calculate your debt to income ratio is utilizing your gross income, okay? So when you look at your year-end pay stub, whatever your regular pay, if you're hourly, if your salary, whatever your regular pay for the year to date was for that year, is what lenders are gonna use, okay? Now, I have an issue with looking at it that way because you gotta look at what the net income is. It is what is the income after everything, after you've paid your partnership to the government, because we're in partnership with the government, whether we like it or not. We are partners with them in the sense that we're paying taxes, right? So I think it's still the wrong way of looking at it, is looking at it. That's what lenders do. That's what we're gonna look at, right? Now, there's variations with income. So if you have overtime, if you have bonuses, if you have variable part-time income, those are all variations that need to be reviewed to determine whether we can use it as qualifying income. So now to the value here is, if you're gonna still qualify yourself for a home loan, here's what we're going to do, okay? When we pull your credit report, we're gonna take all of your obligations, the car loans, if you have any, credit cards, installment loans, any debt that appears on your credit report. Child support does appear on credit reports, so include that if you have that, if it applies. So any debt that will be reported on your credit report will be used to qualify your debt to income ratio. Now, on top of that is going to be the new mortgage payment. So if the mortgage payment is $1,500, $2,000, $2,500, $3,000, whatever the new mortgage payment is going to be, it's also going to be taken into consideration to calculate your debt to income ratio. So when a client asks me what is the minimum income requirement, I can't tell you that. And it is not because I don't want to tell you, it is because I don't know your specific situation. If we were just having a conversation and, hey, dude, I make $100,000 a year, what do you think you qualify for? Again, it's not that we don't want to share that information. It is just because it applies to your specific situation. What home are you looking to buy? So if you're still going to pre-qualify yourself, do that. Calculate your income, calculate your monthly obligations. Also keep a budget, calculate what your monthly obligations are. That way you know what you're comfortable paying every single month. Now, if you like this video, go ahead and hit the like button. If you have any questions that you'd like me to answer in the future videos, leave a comment below and follow. Peace.